Hi, I'm Shakti Priyan. I'm sharing my personal journey about building wealth as part of my YouTube channel here. So this particular one is about how I missed a chance to build a crore. I'm pausing for the disclaimer. Let's continue. As part of this video, we will look at why Nasdaq 100 matters, what I did, why, or how I ended up losing a crore, and comparing various asset classes, equity versus gold, and also versus inflation, and various asset allocation combinations we can do, and the key learnings out of this video. As part of my earlier video, I have explained in detail about how I am doing Nasdaq 100 investments. So this particular one, we are looking at 2 point in time. One is 1 April 2011. The other one is on 3rd November 2025. So Nasdaq 100, as I explained in detail earlier, is powered by two components. One is this underlying the core companies representing the Nasdaq 100, right? And the other one is this USD INR depreciation, right? So over this period, Nasdaq 100 has grown 18.16%, whereas rupee has fallen 4.94%. In net, we are getting around 24% compounded annual growth rate, right? So if you look at the various graphs that are there here, say how this particular ETF tracking Nasdaq 100 has grown from the start to the end of this period. So here it has gone up from $127 to $1,452. And similarly, if you look at the rupee also fallen from 44 rupees per dollar to 89 rupees per dollar in this same time period. So what I did, so this is the most important part of this video, right? So at 22 years, I went and bought this Samsung Galaxy S for 24,999 on 14th March 2011. Now we can connect why I took 1 April 2011, right? If you see here, this is how that phone looks like. I have the phone with me as well. So this is how this particular phone is still in great shape. It doesn't work. That's a different matter, right? So I have this phone with me. This is a zero value, right? I don't know what I can use it. Probably it gives some reflection. I don't know whether I want to use this as a mirror. That's a different story. Okay. So coming back to the point, right? So I don't know how to build wealth, right? I ended up spending the money I was earning. So what if I instead of let's say buying the phone, I went and bought this Nasdaq 100 ETF, right? Instead of buying this Galaxy S, which I showed. So here, if you see, I got a, at this rate, 24,999, I got about 4.44 units of ETF on that particular date. And on 3rd November 2025, the same 4.44 units, after converting into INR, it comes to 5,76,324, right? Like close to, like, say, let's say 25,000 phone or 25,000 spending, what I did could have just grown to 5.75 lakhs. What if I continued holding and it performed similarly? On 1st April 2041, it will be, any guesses here? A staggering 1.58 crores. Yeah, you read that correct. That's the power of a decision which I made at 22 years old, right? When I had the money, I didn't invest properly. I just splurged on the mobile. I just costed 1.58, but I still needed the mobile, right? I cannot, at that point, I needed a mobile, right? So what I could have done is, let's say if I spent close to 9,000 rupees on the phone and invested 16,000 rupees on Nasdaq 100 ETF, it will be 1 crore by April 2041, right? So that's the power of compounding, right? So the more years you throw at it and the more the growth rate, and the investment value is like, it's a factor, a function of three things, right? One is the investment value, and other is this growth rate, and other is the number of years you are putting it up. So essentially, this particular phone, what I'm holding now, is worthless at this point. It's zero value, right? It, it can show some reflection. That's part of it. That's all it can do now. So this could have grown up to a 1 crore in a 30 years time period, which I absolutely missed. So this is what I did afterwards, right? So I did this on 2011 when I bought this Galaxy S. I realized I spent too much on the phone. The next phone I bought is of 6,000 rupees odd, and it survived for some time. And then again I went back and bought some flagship phones. This is where I think time period where I am getting into investing and so on. I started in 2016 somewhat seriously. And then after this one time purchase, one more purchase I did in 2017, I realized spending money on phone is worthless, right? And the last two phones, I'm buying some mid-range phones, saving money and investing them out. That's the core of it, right? So the phones depreciate to zero, and investments grows on the other end. So I picked a Nasdaq 100 to showcase how it could have grown to 1 crores. But in reality, that's not that simple, right? There can be a India-based Nifty 50, Next 50, or gold ETFs, and there is a inflation as well, right? Here, if you see, this is how Nifty 50, which is Nifty B's here, has grown from 56 rupees to 296 rupees in the same period. If you look at the junior B's, which is Nifty Next 50, has grown from 113 rupees to 744 rupees. And if you look at the gold in the same period, if you see the chart from 2012 onwards till 2020, it was just going sideways. It was not really growing up. So afterwards, when the COVID hit, when the stock market went down in 2020, where the junior Bs or the Nifty Bs went down in 2020, whereas the gold went up. So that's the negative correlation gold have with the equity class, right? And after I would say 2024, it started growing a lot. It's growing so fast, right? So it went from some 40-50 rupees into 100 rupees. That's all happened in a year. Right? So so we cannot predict the cycle for any of this. So this is like I am looking at on November 3rd, I'm looking 14, 15 years back and trying to see the trend, how it is and so on. But we cannot see the future. Right? So let's look at this particular graph. Here it is, it's a representation of the inflation, right? So this is the India Consumer Price Index, and what we could have bought for 88 rupees in 1st April 2011, the same goods will cost 197 rupees in 3rd November 2025. So that's how inflation eats up a lot of things, right? So where the USD to INR was aiding us or helping us in the Nasdaq investment, whereas the inflation, irrespective of where you are investing, will eat up the investments. So let's look at various asset classes, how they have grown over this same time period, right? So what we have seen earlier is the Nasdaq 100, which has grown by 24% CAGR, whereas in the same time period, Next 50 has grown by 13.79%, Nifty 50 has grown by 12.07%, and gold has gone up by 11.43%, but largely in the last few years, right? So this is how various asset classes over the same time period has performed, and starting from 1st April 2011 to 3rd November 2025, how their prices or index has gone up. So we look at the same thing, right? And now, if the same 16,000 rupees I'm investing on the 1st April 2011, how does it look like, right? Today it is 3.68 lakhs in Nasdaq, 1 lakh in Next 50, 84,000 in Nifty 50. It is only 74,000 in gold. But the 16,000 investment, the equivalent amount today is like 35,000. The inflation has eaten up, right? So if you project the same CAGR for the future next 15 years, and assuming all the past will repeat exactly as is, so Nasdaq 100 we have seen earlier how it reaches about 1 crore. If you look at the other asset classes, Next 50 is at 7.7 lakhs, and Nifty 50 at 4.88 lakhs, and gold is at 4.11 lakhs. And inflation has gone up from 16,000 to 84,000 in 30 years, right? What costed 16,000 on 1st April 2011 will cost 84,000 by 1st April 2041. assuming that inflation stays the same. So the interesting part, right? On 1st April 2011, there is absolutely no clue, right, what asset will perform better for next 15 years, right? So I couldn't go and let's say confidently go and pick one particular asset class and invest the whole 16,000 into it, right? That's where the diversification comes. Diversification reduces the risk by spreading them across multiple asset classes, right? So I've taken some random combinations here. US tilt with 40% Nasdaq and remaining 15 Indian equity and 10 in gold. And similarly, there is a balanced combination and India tilt and India only, where I'm not investing anything on anything in Nasdaq, right? So with these various combinations, like the various CAGR is getting reported here by combining the individual CAGRs of the same time period. So US tilt is still leads with 17.29%, and balanced combination is at 16.10, and India tilt is 15.68, and if it's purely India only, it's 12.46%. And this is not my real portfolio. My real portfolio also has mid cap, small cap, and debt percentage. I think I've explained it across various past videos. If you are interested, you can take a look at them. So here, if you look at how it has performed for various values, various allocation combination I have shown earlier, right? So here, US tilt 16,000 invested on 1st April 2011. It has become 1,63,975 rupees on 3rd November 25. But is that all, right? No. So if you account for the inflation, right? If you adjust them for the inflation, it is only like 79,173 rupees as on 1st April 2011, right? The 16,000 rupees shifting the time period, right, over 15 years, it has become 79,173 in terms of 1st April 2011 pricing, right? And if we extend this further, right, into future, so by 2041, it becomes 19 lakhs 15,000 in nominal value. The real value is only like 4.28. So whatever you can buy for 4.28 lakhs on 1st April 2011, that you can buy it using these 19.15 lakhs in 2041. Right? That's how we are adjusting for inflation as well. Let's look at the key learnings here. So buying an expensive depreciating asset, right, as a long-term cost impact. Say for example, remember this phone, right, which could have become 1 crore in Nasdaq 100 ETF, is just useless. I'm just, I don't know, because I bought it for 25,000. I'm still keeping it with me. I'm not throwing it out, right? So let's any purchaser, right? You have to compare the long-term cost opportunity we are losing against the current purchase we are trying to make. So more time in the market is always better than timing the market, and we have to start investing early to be there for longer time in the market so that the wealth grows larger. So asset allocation matters here, right? So you cannot pick a winner today and assume that that winner will be the winner forever, right? So various asset classes, various economic cycle, each of them perform better or worse during various time periods, right? So that's why you have to diversify, have multiple assets in your portfolio. So the other important factor, equity compounds very well. Gold protects wealth in the times of trouble, but it doesn't grow your wealth. And the most important point, the inflation silently destroys purchasing power. So thank you for watching my video. If you find this video helpful, please like. You have some thoughts and comments, or you think I have to do a video on specific topic, you can add a comment into it. Please share it with your friends and family, and subscribe for more videos. Thank you.